Hi, everyone. Welcome to Illinois Specific Ins and Outs, the fourth and final webinar in our webinar series, A Business Plan for Your Building. I'm Amanda Viale, the Executive Assistant here at Studio GWA, and I get the pleasure of giving you all of the housekeeping details today. If you have any questions during the presentation, please use the chat and I will pass your question to our presenters. At the end of the presentation, we will invite you to unmute and ask any other questions you may have. And yes, this webinar is being recorded. Today's speakers are Ashley Sarver and Aaron Holverson. Ashley is a principal urban planner and our resident historic tax credit expert with consulting experience on over 30 projects and counting. Aaron approaches the historic tax credit process from the architecture side. As a principal architect, he has experience navigating the integration of design and the historic tax credit standards. With that, I will turn it over to you, Aaron.
Right. Well, do a quick overview of who we are. Small firm, Studio GWA, a multidisciplinary team of architects, urban planners, and interior designers. And we do community planning, development services, which this would fall under, the historic tax credit side of things, and do a lot of work in this arena, as Amanda alluded to. I'm going to do a quick jump back, a reference to episode 3 for those who may not have been or may have been and don't recall exactly, but we got into the details of complying with the Secretary of the Interior standards for historic for rehabilitation and some of the other things from the architectural perspective, and we alluded to looking to more state-specific items. But before we get into that, just wanted to quick refresher overview again. Why do we even look at historic tax credits? What is the benefit for projects on the historic side? It can be really expensive to do them. So any of the financial tools that are available can be incredibly helpful, and HTCs help us with these. We call these four items out specifically, but close the gap, reduce the risk, pair well with other incentives. Almost all of them, with the exception of some. And if you harken back to, I believe in our first webinar, Ashley, we mentioned some of the challenges maybe with a small business loan, but pretty much everything else works really well with, and versatile in who claims them. So what about your building? Is your building is it able to take advantage of the historic tax credits? The main requirement is that it's listed on the National Register of Historic Places. It does not have to be listed individually. Again, this is kind of a refresher from, we've touched on this on the other ones as well, but it doesn't have to be listed individually. That is one option. It can also be a contributing building within a National Register district. So it has to be either a contributing building or individually listed, and then it can be then it qualifies for use of the historic tax credits. We brought this map up before, but this is a great resource. You can click on each state, and it indicates what is available in each state, what each program looks like. Ashley today is going to get into some Illinois specific items, but again, looking at numbers here, we looked at some of this last time as well. But just to give you an idea of the volume of the tax credits for a project of just over 3 million, the federal credit. Again, 20% for the federal, and in Illinois, there's a statewide credit in the River Edge redevelopment zone, which is both of those. You can't do both of them, but one of them is 25%, which most states are 20 or 25% with some variation. But so you can see the dollar amounts. It is a significant component within each. Within a project. So those two items that are listed there, the statewide credit and then the River Edge redevelopment zone, that is some of the stuff that Ashley's going to get into now. So I will throw it over to her.
Thank you. Yeah, we're going to dive really into the Illinois state credits here, just because it's been such a critical funding source for so many projects, and there are quite a few differences between the Illinois statewide credit and the River Edge. So just to distinguish those, let's look at the the Illinois statewide first. This is the one that's a little bit more complicated. It's a competitive program, and that's why it's more complicated, is projects need to compete for these tax credits because there's a limited allocation each year. So we'll talk a little bit more about what makes it a more competitive project in a few slides, but you should know that if you're pursuing the Illinois statewide credit, for your project, there's a $3 million cap per project. So even if you qualified for more credits, there's a $3 million cap for your project. There's also a $25 million program cap per year. So there's the allocation renews each year, but as that goes out, a $25 million program cap per year. And there's 2 rounds that happen each year as part of the competitive process. When we're talking about the River Edge redevelopment zone, it really is a lot less complicated. As I mentioned, it's not competitive. There's no cap on it. However, it's only available for specific communities, and those communities are listed there on the left. For a while, it was just 5 communities, and in recent years, that has expanded to include quite a few additional ones. So those are really, if you're in one of those communities and you're in the River Edge redevelopment zone, those projects have a really unique position in that they don't have to compete for the credits with the rest of the state. So overall, we're following the federal application process. The federal process is kind of the standard for moving through this process. We have the Part 1, the Part 2, and the Part 3. And we'll talk a little bit more about what those entail. If you're going after the statewide credit, there are a couple additional steps that you have to take, and so those are outlined below there. You need an approved Part 2 before you apply for that statewide credit if you wanted to receive the allocation. And then you can see that that statewide process is also a 3-step, also has a 3-step process. So we'll talk a little bit more about that here in a minute. For the River Edge redevelopment zone, it's really just a couple forms that you need to submit. There's the REHTC1 form that you submit when you submit the Part 1 application. And then at the very end of the project, you do the REHTC2, which kind of closes out the project and verifies your tax credits. So for the Part 1, this is really at the beginning of the project. This is before you've started any work. You tap your friendly historic tax credit consultant to say, hey, can you help me with this? And that's something we could do on your behalf. Or anyone else. So the Part 1 is the evaluation of significance. It's really a fairly simple form. We're submitting a map of where the building is, a narrative on the current conditions of the building. We're also outlining the building's significance and its contribution to the district. So that becomes relevant on the map. We need to know that it's a contributing building within that National Register Historic District, and we outline that on the map. We also are submitting exterior and interior images. And I think it's noteworthy throughout all of this, whether it's a federal or a statewide credit, it's not just the exterior that they're concerned about. We're going to be looking at everything from exterior to the details at the interior, including floor finish, ceiling finish, and all of those things. One caveat here is you don't need to do a Part 1 if your building is individually listed. So if you have an individually listed building, you can skip this and basically work right into the Part 2 application. Here's just an example of the Broadway Historic District. This is in Aurora, Illinois. And so you can see that the boundaries of the Broadway Historic District are outlined in red, and then we identify the subject property in yellow to give an indication of where this project is. For the Part 2 application, this is really the bulk of the work. This is where a lot of decisions get made, and we're focusing on the design of the project. So all projects must complete a Part 2 application. In this, we're doing an estimate of qualified rehabilitation expenditures. That's kind of a long name for saying the project costs. Not everything will qualify as a QRE, as we call them, but we're outlining what our best guess is to get a sense of the scale of the project. We're also submitting pre-construction photographs of interior and exterior. We're getting more detailed in these than the part one. Part one is kind of the overview. Part two is getting into the nitty-gritty. We also are submitting a narrative description of what the existing condition is and our proposed plans for those improvements. We're including floor plans and specifications. So for those who are working or are familiar with the architectural design process, usually you need a set that's at about a design development level. And so that's what you want to have ready and flushed out to submit with your Part 2 application. There's also a fee associated with this when it comes time to review. That is determined by the National Park Service, and they send you an invoice for that. It's also possible that the National Park Service or the State Historic Preservation Office may request more information or attach some conditions during this time. It's not atypical to say, I'll need additional details on signage once you have that developed, or I'll need a mortar sample, or I'll need cut sheets indicating exact details on windows. Those are some of the things that are pretty common to see. Other things are really unique to each project. So this is kind of an example of what this looks like. We pulled a few tidbits to show you what these forms look like. On the left is the Part 2 application, and I know it's small, but you get a sense of just you're filling out some data points on the project, on the owner of the building, and then on some of the project details, including the QREs. On the right is just a snippet of one of the narrative sheets. So like I mentioned, we're going through and we're describing each feature. We're describing, like in this case, this is the west elevation of the building. And you can see that just describing the west elevation in this case is a one-page endeavor. So we're doing that for all of the elevations, all of the floors, every tenant space. We do it for the roof, and we do it for all of the interior spaces. We also submit a photo sheet that has photos of all these different elements. Again, you see, kind of overall exterior photos, and then you see these detail photos that are from the interior. We also submit a photo key. It's not uncommon, your state historic preservation officer, they may come and do a site visit, but the National Park Service reviewer is unlikely to ever come to the site. And so this photo key is the way to indicate to them the condition so they can get more familiar with the state of the building. Amendments. So this happens throughout the life of the project, especially if you're setting up a phased project. You might not know everything you're going to do for your project until you're a portion of the way through. So you might set up your project as a phased project, which is say just the second and third floor, and then you're going to do phase 2 as a first floor build out. So as an amendment, you would submit the details for what that tenant build out is going to be. That's down the road. We don't know it just yet. So when the time comes and we have those details sorted out, that's when we submit the amendment. And it acts kind of as a mini Part 2. A lot of the same details are required for this. At the top, you can see this is just an example of an amendment that was filed. There was some field verification that needed to be done, and this changed how we were going to design the lobby. So we needed to show what that redesign was going to look like, where our door would now be located, and get that approved by both the state and the National Park Service. Photos are often accompanying this, and then we just describe the changes in the way I just did. For the statewide specifics, as I mentioned, there's you have your federal process, your Part 1, Part 2, Part 3. For the statewide credit, there's also this kind of adjacent 3-step process. And again, you can only do this once you have your approved Part 2. So you can start going through this process. So the S1 is really a virtual workshop that the Illinois State Historic Preservation Office, they do online, and it provides a lot of background information. It tells more about the ins and outs. It's much more detailed than even our webinar today, but they get into the nitty-gritty of the specific submittal. In the S2, it's really very time sensitive online submittal. They open this online application at about, I think it's 10 a.m. On a specific date, and you enter in your project details and you are trying to submit it as quickly as possible. The reason you need to submit it as quickly as possible is that if there are projects that have the same number of priorities, which I'll talk about in the S3, the one who submitted the project quickest online wins, if you will, or receives that allocation. So you're trying to be as time sensitive as possible. With this, most projects are submitting their online submission within the first 1 second. It comes down to really milliseconds in terms of when these projects can beat each other out to get that coveted spot. So in the S3 is really a lot of the bulk of this process. The S3 is a determination, again, estimating those qualified rehabilitation expenses for your project. It's asserting the priorities, and those priorities, there are 5. So your project wants to assert as many of these priorities as it can. One of those priorities is if the building was previously government owned for greater than 6 months. And so you have to show that either via deed, but that can be, state, township, county, federal, state government, whatever it was, government owned for at least 6 months. The second priority is if your building is located in a county that borders a state with a historic tax credit program. So if your county borders Wisconsin or Iowa, or is in Cook County because somehow that borders Michigan, then you're able to assert this priority. The third priority is if you're located in a census tract with a median income at or below the Illinois median. So if your area is in a census tract that has a lower income, you get to mark that priority. Fourth priority would be a partnership with a community development entity or a nonprofit. And, it doesn't have to be that they're super integrated into your business model. That could be one way to do it. You could also see it as, we open the kitchen for a training program to allow for that use of the space, or we let a church use the space on Sundays at little to no cost. So there are multiple ways to set that up. It'll be different for every project. And finally, if your building is located in an emergency declaration area, you are able to assert another priority. So the goal really is to assert as many priorities as possible. If you don't hit any of these priorities, your project really does not have a strong chance, if any, because a lot of projects coming forward are hitting at 3, 4, 5 priorities. And so they're jumping the line basically to be able to get that allocation of the state credit. Finally, on the part 3, so you do your part 1, you do your part 2, you do your construction, and then we do the part 3. So the part 3 is really closing out the project. We're looking at post-construction photos. We're taking photos of everything that we took photos of in the part 2. We're showing the state and the National Park Service that we constructed the building the way that we indicated that we would, being sensitive to all those historic elements. We also are doing you're doing a calculation with your accountant of the post-construction qualified rehabilitation expenses. In those earlier forms, you're providing estimates. At the end, you're providing those hard numbers. There's also a fee at this point in the process for review of those. So there's a cost for the National Park Service review. And I just wanted to point out an example of one of the statewide projects. This is a project in Champaign, Illinois, nice Main Street building. It was with a contributing building within the National Register Historic District there. And this is one that had been vacant for a little while when the owner wanted to renovate. And so you can see kind of the before photo here and the after photo here of, you see some changes to the storefront, you see the installation of new windows on the second floor, And at the interior, you're seeing side-by-side views of what used to be a very dark bar transitioned into a pretty bright event space. And so you can see when we're submitting those photos of what it was and what it is now, those are the elements that they want to see, is that transition over time. And in this case, this was a project that wanted to use the statewide credits, but unfortunately didn't have enough priorities to beat out the competition in those rounds. So this is a project that was able to pursue the federal credits, but not get an allocation for the state. And what that meant for this project, at least at that time, was that the second floor was going to have to be a future phase down the road. If the state credits had come along the way, then those upper floors might have been able to be taken on as part of phase one, but just due to budget constraints, the upper floors have had to wait because that allocation didn't come their way. To talk a little bit about the River Edge credit, and again, a lot less complicated because it is not competitive. It is still a 25% credit, just like the statewide credit. Still for income producing historic buildings. These can be for residential, commercial, agricultural, but it's just for select communities. And so you can see on the map where those are located. It is called the River Edge Redevelopment Zone. We know that there's way more rivers in Illinois and more communities in Illinois along rivers than just those identified here, but this is part of a legislative process to get encapsulated into this River Edge Redevelopment Zone credit. So communities here are able to access that credit, and it should be noted that you have to have a River Edge Redevelopment Zone set up. So it's one thing to be identified as a community to access it, and then the next step is to set up that zone. Where are those buildings that can access it? So to show you what that looks like, this is an example in Aurora. On the right, you can see the redevelopment zone map, and it aligns right along the river for the most part, and branches out from there, encapsulates a lot of their existing historic districts. So they set it up to do it that way. Each community can set it up their own way. Obviously, you want to be able to incorporate as many historic buildings as possible, as the benefit really lies in being able to access the credit. But as part of the part one, this is where this map comes into play, because you're having to submit this with the REHTC1 form, which is just a long way for additional gathering of information for the River Edge credit. And just to talk about impact a little bit, the program in Illinois actually started with the River Edge program, and then in the last about 5 years or so, we finally had access to this statewide credit. And so as due diligence goes to evaluate the value of this credit and what it does for communities, an economic impact study was done. And these are some of the findings from it. And I think they're just worth noting and looking at, because at least in a lot of the communities that we've worked in, we know that working with the developer, these projects would never have happened without these credits. And so the impact is really, in some ways, you can bring it down to dollars and cents like we see here, but it doesn't fully capture what these credits have done for building community, rebuilding downtown areas and civic centers across the state. And that's true not only in Illinois, but also in the other states that these credits are accessible. Projects, historic projects are difficult, and the financials are difficult, as we've been looking at throughout the rest of our webinar series. And so the state credit really just offers an additional means to be able to access financials to help these projects get off the ground and make an impact in their community. And so just going through, some of these facts here, just in Illinois, the Illinois Historic Tax Credit has created 130 direct and 146 indirect jobs, $244 million of private investment. And again, I can't say for every single project, but for most projects, that $244 million likely would not have happened without these credits. We see, again, some additional jobs from the River Edge. The River Edge has created 175 direct and 195 indirect jobs. And again, that program has been in use a little bit longer. So when you're looking at the credits, even combining those facts and figures together shows the true impact. We can see that it generated $11 million in direct income and $11 million in indirect income. And the River Edge projects represent private investment of $325 million. So the amount of spending that has happened because of these credits really can't go understated. And so as we look towards the future and of projects that can utilize this, there are, of course, conversations out there of wanting to see the statewide credit be even further expanded to be not competitive so that more projects can access it. And there's just a lot of potential for additional projects down the way. Lots of buildings that still need redeveloped, as we all know. And I
One
think
thing I'll note in that as well,
Yeah.
Ashley, I don't remember if this study, do you recall, did this economic impact study get into at all the kind of the area impact economic wise, not just that building and jobs created within the building, or was it around?
Yeah, I think the direct jobs are really associated with those particular projects, and then those
Okay.
indirect figures are the ones that show kind of the spillover effects of, if there's more construction jobs, then that means they're selling more building materials, and if they're selling more building materials, it kind of has that ripple effect. So the indirect piece is the piece that shows kind of the ripple effect. Yeah. And I think from there, we'll open it up to questions from anyone. I know I'll allow mics if you like, or if you want to tap them into the chat, that's fine as well. One question I often get from some clients is about the competitiveness and can I keep reapplying? And the answer is yes, you can actually keep reapplying for that statewide credit. As long as you have your approved Part 2, you can continue to apply and reapply. You can actually keep applying after your project is finished and even after you have your Part 3 approved. So, it just, sometimes it comes down to who you're competing against. Some rounds have more projects submit than others. And so it's worthwhile if you think you have a competitive project to continue the application process.
And we've had that happen on some projects that we've worked on or are working on as well, where second or third time is when they got the allocation. So definitely worth reapplying.
Absolutely. Well, if we don't have any further questions, I'll turn it back to Amanda to close us out.
Do you want to? Perfect. If you guys would like any more information on what we're doing as a firm, or if you would like to see parts 1 through 3 of a business plan for your building, you can visit our website at studiogwa.com. Otherwise, thank you so much for joining us today, and we'll see you later.
Thank you.